Hey everyone, me Kevin here. I just put $70,000 into a stock I believe has a solid future right now, and it's incredibly undervalued. I had actually put in 50 and then I put in an extra 20, and I really want to share it with you. So don't just blindly follow the advice. Let me show you my reasoning. That way you can make your own opinion, because it's always important that you know I'm just some dude on YouTube. So if you lose money, it's not my fault, but at least I could expose you to this idea. And in the meantime, if you like this kind of content, tap that little like button. That way YouTube knows you want more stock content, and when I post stock videos, they actually show it. Because usually YouTube's like, no, stock video, it doesn't say stimulus, we're not gonna show it as much. It's like, ah! All right, anyway, here we go. The first thing that I wanna do is I wanna take a look at what's actually happening on sort of the Google trends for this company, and then I'm gonna reveal the company to you, and we'll go through the good, the bad, and then the numbers. That's what we'll do, good, bad, numbers, in that order. All right, here we go. So here are the sort of Google Trends search histories for this company. And what's really fascinating when you look at a company like this on Google Trends is you can really see that this company does have a consistent growth trajectory. But the problem with it is you got the Roni Rona over here, which, remember, I say Roni Rona not to be disrespectful, it's just the YouTube doesn't like me saying that word. So the great thing about this is on a scale of 0 to 100, we actually just recently hit peak search volume for this company at the end of 2019. That is back in 2004 to really 2010. Look at this, we were under the 50% level compared to the search volume that this company gets now, which is nice because it sort of reiterates that long run consistent growth. This isn't like a flash in the pan company that's here today, gone tomorrow. But the Roni Rona has really hurt them. So what kind of company could this be? Well, here you go. It's Dave & Buster's. It's an entertainment company, it's a restaurant company, a food company, it's an alcohol company, you name it. And here's what I think is so interesting about this company. First of all, this is the investor presentation. And I think as I go through this with you, you'll see some of the things that you like as well. Is I personally believe that this is the kind of company that is going to take over rather, the malls in America. That is, this is the kind of entertainment-focused company that is going to attract people to actually socialize, gather, eat, drink, play games. This is the future of malls. We're not going to the malls anymore to buy underwear and socks. We got Amazon to do that. So think about JCPenney, for example. JCPenney, to me, those kind of companies, they're going gone. And instead, in their place can come companies like Dave & Buster's. Even like mall REITs like the Simon Property Group, by the way, are happy JCPenney is going away, which might seem ironic, but JCPenney was a very low rent paying anchor tenant. So even the Simon Property Group that owns a bunch of malls, the biggest mall owner in the country, is like, bye JCPenney, we gotta go move towards the future. And the reality is the future of malls, and I wrote this up here, is experience related services, like they mentioned here. Beer, wings, they have Beyond Meat burgers, games, cocktails, happy hours. They target millennials who then come back with their children. And surprisingly, even almost 10% of their revenue was from corporate events. I don't know, I personally thought that was surprising, but the fact that you can go to a bar, drink and eat and order food, and then walk around and play games and socialize with people, it might be novel at first. You definitely see the decline in sales after the first 1 or 2 years that a Dave & Buster's is in a location, but it's something that you can consistently go back to, especially if it comes to be known as the future of sporting bars. You want to watch sports? Here you go. You want to drink? Here you go. You want to go play billiards or bowling or entertain yourself? Great. And the fact is, they're also now using a lot of technology that's going to replace those darn cards that we always have to use and collecting all those tickets. Instead, now the Dave & Buster's app has become pretty functional to not only let people kind of keep track of their actual chips that they have, but in the future, I think phones are going to replace the cards entirely. And then that way, when you pop open the app, you can register your power card and you can track all the tickets you have and whatever credits you have or discounts and coupons. This app has actually been very dangerous for me because every time Lauren and I, we go to Dave & Buster's, we end up recharging it, and it's so easy to recharge it and spend money on it. It's been a problem for us. We've gone there way too much. Maybe we're just fanboy and girling here. But overall, the experience is pretty great, and I do think that this is sort of the future of what we're going to be expecting in malls. Let's go back here to the investor presentation. Let's do a couple more things on the good, and then let's hit the bad, because there's definitely bad here. So here's the thing. Great company. We got that. We think it's entertaining. It's certainly a company that, well, they say is attractive to landlords. It's not right now during the Rona. And, hey, I love what they're doing with their specials, like unlimited wings or half-off games on Wednesdays. These kind of specials definitely get a more frugal culture coming back. And in my opinion, I still think that the 2020s are going to be the frugal decade. Now take a look at this. This is a growing company. They're adding stores dramatically. The Rona has obviously paused the contracts that they have for new stores and their plans to reopen new stores, but take a look at this, or at least presumably, right? Take a look at this. They're going into, most of the stores they're adding are going into new markets, 55% of the stores, and most of the stores now are going to be a smaller format store, which is really good because I personally believe we have to travel around 40 minutes to get to our Dave & Buster's, which is a little frustrating. The more these stores can penetrate malls throughout the country and in smaller areas, the more this becomes that backyard opportunity to get out of the house and go watch the game at the sports bar and then go actually play some games as well. To me, the new small store format, while it's a little bit less profitable for Dave & Buster's, is a really good idea, and it's going to keep their overhead costs down. Those lease costs are dangerous. And so I've personally been very impressed with how they've been able to maximize their return on cash, their return on assets. See, look at this. For example, here, the first year when they open a new store, they usually only spend about $4.5 to $8 million, which, I mean, that's a substantial number, but for opening up a store, I personally thought it was going to cost a whole lot more. So when I saw that, I liked that. And I liked that they see on the first year, within the first year, a 30 to 40% cash on cash return. And then thereafter that, for the next 5 years, they tend to level out at about a 25% cash on cash return. And then they have to move into smaller markets as they sort of continue to milk those markets. So yeah, there is definitely a decline in sales as people become more familiar with the company, but it is something that you get a nice surge at the beginning, you milk it, and then you just keep milking it while it's there. Now, the other thing that makes me really excited about Dave & Buster's right now is the company is only selling for $19.31 a share at the time of this recording, which is substantially lower than the multiples the companies was selling for in the past, which we'll do those numbers in a moment. But remember, quick reminder, get the links down below for life insurance, my courses with the coupon code, and of course, get 2 free stocks with Webull. Remember, if you deposit just $100 with a stock trading platform, Webull, you can get 2 free stocks up to $1,400. Now, on this, I will say the company has a very modern layout at almost all of its stores, and one thing that they do really well that they have above and beyond Chuck E. Cheese is they really keep up on their games and they modernize their games. This is going to be one of the downsides though because it's expensive. Now let's talk about some of the negatives. Because of the Rona, Dave & Buster's had to issue and sell about 11 million shares. That gave them cash, and it leaves them with cash without necessarily having more debt because they sold shares, right? So that's good. We don't want them to have to take on really expensive debt like the airlines or Carnival Cruise Lines had to, because that's going to weigh down their future earnings. And the beautiful thing about Dave & Buster's is it meets the guidelines for Main Street lending via the Federal Reserve. That applies to, well, if you're a business with less than 15,000 employees, and I believe it's less than $5 billion in revenue, which Dave & Buster's matches, and it's either of those conditions, then you can apply for basically really cheap loans for the next 5 years through the Main Street lending program, where you have a 5-year term to pay it back, and the rates are cheap. I think they're somewhere around 3.5% to 4%, which compared to, some of the loan sharks looking for money from Carnival, between 8 to 11%, 3 to 4% is a great deal. It's still more debt though, which is a problem. So a few problems here though. If they issue more shares, that means the odds of the company going back to the previous share value is lower, right? We're gonna have to redo our math here. On top of that, it's good that we don't have debt, but they're probably going to have to take on more debt, and they already have debt. They've already drawn down the credit lines they have, and they're already actively looking for more debt money. That's why I think they're gonna be a perfect candidate for the Main Street lending program. But when you buy this company, what you're really doing is you're putting your money into this company's ability to convince people to go to Dave & Buster's for a drink, for food, for entertainment. You want a Beyond Meat burger? Go to Dave & Buster's. You want to watch the sports show? Go to Dave & Buster's. You want to have some fun with your friends and, I don't know, win a party hat or something like that? Go to Dave & Buster's. That's really what you're betting on with Dave & Buster's. And here, I think you're betting on that over the long run. This is definitely not a short-term play. To me, this is at least a 4 to 5 year hold before we really see this company actually get back to its potential. Now, I will also say I personally hate owning restaurants because restaurants are a very low margin business and they're also very high risk. And by high risk, I mean, if somebody has a bad experience, it's very hard to win somebody back. You know, people are hungry, they can get a little bit cranky when the food doesn't come fast enough. That is, you're more likely to piss people off in the restaurant industry. But the beautiful thing about Dave & Buster's is 57-ish% of their revenue comes from the amusement portion and from games. And now you're really just giving people games and alcohol and food combined. So hopefully that can create some more long-term brand loyalty in addition to their app and how easy it is to keep track of your tickets or promotions or in-app purchases. I mean, it is like the psychology of spending money going to Dave & Buster's. And I love it as an investor, and honestly, I love it as a consumer as well. It's fun to go there. But yeah, I mean, like, it can get pricey too. But believe me, I would much rather personally own Dave & Buster's than the Cheesecake Factory, even though I would rather have my fresh Atlantic salmon with white rice from the Cheesecake Factory with some of that sweet, sweet brown bread. I'll have the white bread as well, but I definitely favor the brown bread. Okay, so now here's the thing. When we look at the balance sheet for Dave & Buster's, they've got $290 million in liabilities due within the next 2 years. They only have $78 million in current assets. So you've got a little bit of a problem, and that's based on the last annual report. I mean, we don't even have all the numbers for all the debt that they need to take out yet. So you've got some issues coming up. This is a company that needs to open up. If this company is not open, and if this company is not back to full capacity within the next year, there is a very real possibility that this company could just lose money over the next 2 years. That's not going to be very good for the stock, obviously, in the short term. But I think that's why it's selling for the discount that it's selling for right now. Something that's probably a good thing is Dave & Buster's does also lease all of its stores, so hopefully Dave & Buster's is able to negotiate with its landlords to get at least some kind of rent break in the meantime. We'll see, though. We have no idea how these commercial lease negotiations and lawsuits against, Gap are going to happen with the Simon Property Group. I mean, there's so much drama in the commercial space right now. My favorite kind of commercial is this. Like, if I have to pick, it's entertainment value and food and drinks. Unless you're in Utah, because if you're in Utah and you want to drink in Utah, they kind of like rope you off and they put you into a corner, which I'm not trying to bag on Utah. My mom lives in Utah, like I get it. It's totally fine. But let's keep moving on. Expect the stock to be very volatile. Any bad news could potentially push this stock down even further. So expect to see volatility in the stock. I don't think it's the kind of company that's just going to skyrocket 100% tomorrow and there you go, you take your gains and run. I don't see that happening. Another minus that I see with this company is I wish they leased more of their games, but it looks like they buy the games they have, which you have to keep renewing those, right? So you're really then recycling them and dumping them and then buying new. I'd almost rather see they have third-party sort of leases come in and that can maintain these. But Dave & Buster's is more of a company that tries to take control themselves. So they buy the product, they train their staff to manage the devices and the product and maintain them. And I guess maybe that gives them more control, but it is going to be a little bit more expensive for them, especially since in order to get people coming back, you kind of need to keep changing the games. If the games are always the same, it can get old, and so that is a risk factor. Though, I mean, look, Chuck E. Cheese hasn't gotten old, Disneyland hasn't gotten old, so there's always a factor to being able to go be entertained at a place you've been entertained before. Now, let's take a look more at the actual numbers here. Let's pop these up now. All right, so here we go. Top line revenues are consistently up. However, their income has had a little bit of a drop in 2020 before the Rona, and it looks like this is because they've been spending a lot of money on opening new locations, yet they're still substantially profitable, which is very, very good. They're selling for a very low multiple, even though they had a slight decline in revenue there. Well, a slight decline in 2019 and then a little bit of a larger decline in 2020. Something to keep an eye on, though. Obviously, we want that net income going up, and the Rona's not helping. But look at some of the growth here from 2016 to 17. You got 16% growth, then you got 13% growth, then you had 11% growth, then you had 7% growth. A little bit slower in 2020, which makes you wonder, did they, kind of milk their honeymoon period over here? And are we going to see slower growth now, or are we going to see more growth? And obviously, the Rona is, a very, very big concern. But again, that's why the company is selling for the discount that it's selling for. Let's go ahead and zoom out here, and let's try to make an assumption here. Let's try for a moment, if we put aside the Rona, because we don't know the extent of that impact yet, we can maybe assume that this company will grow at, let's say, 6%. If the company grows its revenues, its top line at 6%, and we take off their margin and we take off taxes, maybe in 2022 or 2023, maybe worst case 2024, depending on how long it takes them to pay their debts off, we could see revenue for this company, that is a net income, not revenue, net income. We could see net income be somewhere around 144 million projecting forward. If we can get to 144 million in revenue, that's just with 6% growth from their 2020 annual report. And I know the Rona is going to hurt. That's why it's going to take a little longer to get to that 144 million in revenue. If we get to that, and we divide the current share amount by 45 million, because they issued about 11 million more since this report was posted, then this company is really generating about $3.20 per share. The cool thing about this company too is they really haven't sold for less than 13 times earnings over the last 20 years. They're usually bouncing between 15, 16, 17 times earning. But if we take the low of 13 times earnings, and we say, okay, the low of 13 times earnings, projecting forward to 2023, 2024, and we multiply that by 3.2, we could see this company's share price double from where it is today. Today, it's selling for about $19.30, and with these numbers, it would be reasonable with a very low multiple of 13 to see it sell for $41 a share. Now, if we go more conservative and we say, okay, well, let's just give it a 10 times multiple because maybe there's more debt or more concerns or whatever, still selling for $32 going forward into the future, whether that's 2022, 23, 24. Okay, I'm recording this trade execution slightly before the rest of the video because I want to trade it. So I want to show you how to do it though, so that way if you are not familiar with how to do it, not only can you see me actually do what I say I'm going to do, but you can see how it works. So today what we're going to do is we're going to use Webull. I'm going to make this as simple and quick as possible. So here we go. There's the Webull app, which if you haven't yet, remember, you can open an account, use the link down below, you deposit $100 so you could start making these trades. You could buy 5 shares of this company if you do that, but you'll also get 2 free stocks. And if you don't like those 2 free stocks, you could sell them and buy some more or something else. So it's 2 free stocks of money if you deposit $100. But anyway, if I go ahead and open this up, you'll see we've got a lot of red today. I mean, look at that. All of these like recovery stocks, the Simon Property Group, the airlines, the cruise lines, they're all hammered today. But Dave & Buster's right here, down 7.63%. Let's go ahead and execute a trade on this. So all you had to do, well, let me go back here. So when you open this up, you want to just hit the little magnifying glass at the top, and then you're going to type in PLAY. Now remember, only do this if you think it's a good idea. Don't take my word for it, because if you lose money, I don't want to hear about it, okay? You can't always be right. And I make a lot of mistakes, okay? So I just full clarity here. Anyway, so there we go. Right now it's trading for $19.38. So I'm going to go ahead and hit this little trade button at the bottom here. Face ID, oh, I should move in a little closer. There we go, get that Face ID recognized. Cool, so here we go. I want to buy $50,000 worth of this particular stock right now. So what I did is I divided 50,000 divided by 1942. And if I do that, it works out to buying about 2,500 shares. So let's just go ahead and put in 2,550. There we go. That works out to 49,400. But wait, we got to be right with the title. So there we go. We'll go to 2,580. Okay, perfect. Now, you could put in a limit price or a market order or whatever. Market order just means you're putting the order in and it's going to execute, at whatever the price is that the market's selling it for right now. So if I push the buy button and it goes down, it'll buy it for that. If it goes up, it'll buy it for that. But I could also limit it and say, well, I only want to buy it if it's under 1940. So right now it's at 1941, it wouldn't go through. But I want to see this trade execute, so I'm just going to go ahead and open up my limit to, let's say, 1948. It'll go through anyway at the market price. So let's go ahead and put that buy order in. There we go. Confirm. There we go. Order is in. And now all I got to do is wait for the confirmation that this open order has been filled. So far, they have filled 0 of those shares. So this there it is. Okay, perfect. It just went through. So now I should be able to go to my positions here and see it. There it is at the top. We've got Dave & Buster's, and so far I made $53 on that trade. Bad. Don't look at it that way. You will go nuts if you look at it that way. But yeah, there we go. Position purchased with Webull. Get your 2 free stocks. All right, let's keep talking. So to me, this company, and there's a lot more to this than I did. There's more research, but I want to give you as much of a bottom line as possible. I think we were pretty detailed in this video, but for me, this is an exciting one. I like this company. I'm bullish on it. Maybe I'm overly bullish on it because I love going there and I love the experience that they provide, and I do believe that that's the future of America. But I don't think 6% growth based off that 2020 number. I know the Roni's coming. I know we've got debt problems, but I don't think that's excessively unreasonable. Again, it'll be interesting to see, what evolves, but I like the company enough to where I put in 50K this morning, and then I dropped in another 20 right before recording this with M1 Finance. So if you appreciated this, give this a like, share it, consider hitting that subscribe button. Make sure to get your 2 free stocks with Webull. Deposit $100, get 2 free stocks up to $1,400. Get your life insurance. You need that, especially if you're gonna go out and about. Get your life insurance. And folks, consider joining me in my courses in the links down below. Thank you so much for watching, and we'll see you next time.